Thanks, Craig. It's great to be here today to talk about the zinc business unit. The zinc business unit is poised to capitalize on improving market fundamentals. Andrew will speak about the market fundamentals later on. But just highlights of the zinc business unit: we're increasing our throughput to offset declining grades at Red Dog. Anybody that's followed the Red Dog story knows that the grades initially were in the low 20s for zinc, 22, 23%, and have been drifting down for the last number of years as we exploit the Culloch deposit. And we've been largely successful in offsetting those grade declines by increasing throughput, and we'll see that later on. So we're maintaining a pretty constant metal output from Red Dog. We're extending the mine life at Red Dog. We just converted some resources to reserves here this year. It's not a large area, but quite a high-grade area that will act as a sweetener as time goes on. We've just completed the opportunistic restart of the Ponderay mine, small, but another 44,000 tons a year of zinc metal to Teck's account, 100% to Teck's account. It's got some interesting synergies with our Trail smelter. Trail, just to reiterate, it's a low-cost power and byproduct advantage. A Trail, it's not ideally located anymore. It's not on tidewater, but it does have low-cost power. It's an integrated lead-zinc refinery, so we're able to take advantage of zinc and lead concentrate and lead and zinc concentrate to maximize recoveries. And we have some unique byproducts there that diversify our product mix as well. And last but not least, Dale already spoke about Antamina, but Antamina not only is a world-class copper mine, but it's also quite a significant zinc producer. We'll see later on that it averages around 230,000 tons of zinc metal per year. And of course, 22.5% of that would be Teck's share. Just to briefly follow up on our safety discussions from earlier on, starting with Ian. One of the high potential risks we have across the company is stored energy. And the way we manage stored energy is through a process called lockout, tagout, tryout. It's a very basic thing in the industry that when you're working on a piece of equipment, you ensure it's locked out, you push your personal lock on it, you put a tag on it to describe why it's locked out, and then you try it out before you work on the piece of equipment. It sounds like a very simple principle, but a lot of folks have been hurt by not following this practice, and you could be seriously hurt if you're in the wrong spot at the wrong time. We work with some tremendously large pieces of equipment, and the lockout, tagout, tryout principle is very important to ensure that folks don't get hurt while they're working with that equipment. A simple example would be raising a box on a haul truck. That haul truck that box has a lot of stored energy. You're depending on the hydraulic cylinders to hold that box up. So you got to make sure that there's usually pins in this case to pin the box up, that it's got a physical barrier so that the box can't come down when you're working underneath it. Sounds simple, but it's a very key, simple thing that needs to be followed to ensure that folks don't get hurt doing those type of tasks. So that's what we would call a critical control. So just briefly, we're going to go over the zinc operations. Again, we're America's focused. We've got a mine in Alaska, the Red Dog mine, the second largest zinc mine in the world, the Trail smelter in southern BC near the US border. It's on the Columbia River. Our power source is the Waneta Dam, which generates very low-cost power, integrated first quartile cost smelter. The Ponderay mine just across the border in Washington State. In Antamina, as I mentioned, although it's a copper mine, it's a very low-cost zinc producer, or a very significant zinc producer as well. Following up on the comments on cost reductions, zinc is also contributing to cost reductions. Our big areas of focus last year were employee reductions. You can see the top bar there, 17 million in savings over the last couple of years. The other area is mining productivity, and this is really due to throughput increases at Red Dog. Some of that has been as a result of opportunistic geology. We've had a high barite ore, which is softer and goes through the mill quicker, but it's also due to taking some of those lessons that we learned at Highland Valley Copper about using high-energy blasting and applying them at Red Dog to enhance our throughput there as well. So we've been able to reduce our unit cost of putting a ton through the mill at Red Dog. And then there's a number of others. The next big one's probably down on contractors. And contractors is just ensuring that we've got correct scope and managing the contractors to the scope. As I said, at Red Dog, we're maximizing the value we've going to get out of Red Dog. We've increased our throughput from around 3 million tons a year, perhaps 10 years ago, to over 4 million tons a year last year, and that's been largely able to offset the declining zinc grades that we've experienced. We reduced our milling cost as throughput has increased. I'll show a small chart on that. And we've extended the mine life by converting resources to reserves, and we're doing additional regional exploration in the area to find more resources. This chart shows how we've offset declining throughput. Zinc grade is in the orange or beige color, and it's on the right-hand scale. So you can see over the last number of years, it declined from 19% down to about 16.5%, and mill throughput in that period of time has gone from 3.7 million tons to over 4 million tons a year. So the bottom, the green line, zinc concentrate has remained relatively stable. We expect to be able, this will be the situation for another few years yet, and then we have some options to enhance our mill throughput even further by, it would probably take some capital investment to do that. Managing costs at Red Dog, there's a large fixed cost base, as you can imagine, with a remote mine site like this. Just running the camp alone, bringing employees back and forth to work, air charters, those sort of things. So the more throughput we can get, the higher, more leverage we have to reduce our unit cost. So this chart shows our mine production and mill throughput on the left-hand scale in tons. Mine production includes waste stripping, and our unit cost tons through the mill on the right-hand, or the orange, red line, which is on the right-hand scale. So you can see we've dropped our unit cost through the mill from $70 a ton down to $65 a ton. And that's largely coming through throughput. This doesn't reflect a lot of the fuel pricing changes that have occurred because, as you can imagine, last year we were buying fuel in the summer and during the shipping season, and prices hadn't really dropped that much when we normally buy our fuel for Red Dog. We've also converted some resources to reserves. This is an air photo of the Red Dog area. The lake in the center is, of course, a tailings pond. There's a small mined-out pit called Main Pit, and you can see the orange staining from the water that's contained in the main pit. Just immediately to the right of that is a culloch pit. That's where the mining activity is now. And the Kanayak pit is the bare spot on the hillside just to the left of that. It was originally called the Hilltop Pit if you go back a number of years. Anyway, that resource has been converted to reserves, probable reserves, about 7.5 million tons at, as you can see, the grades are quite nice there, almost 25% zinc and 7% lead. So we'll be able to blend this in over the next number of years. It is oxidized, and we'll have to treat it carefully going through the mill, but it will be a good sweetener for ensuring that our zinc production stays at maximum levels. In terms of the region, this map shows a region, approximate location of the various deposits. The Red Dog mine is located in the dark orange dot there, and that includes the main pit, a culloch which we're mining, Kanayak, which we just talked about, including the reserves. The blue areas, the dark blue areas are the Nana lease areas where we operate under the 1982 agreement and pay a royalty to Nana. The light areas are 100% Teck on state land. And the two deposits that we're actively looking at there are Anarak and Aktigaruk. Anarak's about 6 miles to the north, and Aktigaruk's just a little bit further north of that. Both of these are fairly deep, but reasonable grades, and could sustain Red Dog for a number of years to come. So the chart on the bottom just shows the amount of drilling activity we've had in the area. So other than the 2009, when we had the global financial crisis, we've been pretty steady at exploring the district. Pend Oreille, again, the small zinc mine just across the border from Trail. It's a restart project. Our costs there were estimated at $45 million US to restart it, and we're just a little over 40 million now, so we've had a good favorable cost of about 5 million on the restart project. We've been able to get the first concentrate out the door on December 16th, 1 day behind schedule. That's close enough for my liking anyway, and we're in the process of ramping it up. It's capable of 44,000 tons a year zinc metal. Next year, or this year, in 2015, it'll about 40,000 tons a year because, of course, it includes the ramp up. This graph at Pend Oreille just shows the ramp up since December, and the various colors there, starting from the light blue, is ore broken underground, so that's the blasted ore underground. Ore conveyed is in green. Ore milled is in the darker blue color, and the red line is, of course, our target. And the throughput rate there is 2,200 short tons per day, which we'll plan to achieve by April 1st. Again, Antamina, we talked about earlier, is a significant zinc producer. This simple chart just shows total metal produced, copper and zinc. The left-hand scale is in tons. So you can see zinc is quite variable. It is a skarn deposit, and so we'll have some very good years and some lesser years in zinc, but nonetheless, over the last number of years since 2004, we've averaged about 230,000 tons of zinc metal. So it's a very significant source of byproduct zinc for Teck. Last is our Trail smelter, just in British Columbia. Again, it's we constructed a new acid plant there last year. You can see on the right-hand side, had a very seamless ramp-up. It was commissioned in May 2014 and has really contributed to stable operations since then. Trail is, as I mentioned earlier, not ideally located anymore, but it is a low-cost producer because of low-cost power supplied from the Juanita Dam, our 2/3 interest in Juanita. Our costs are about $6 a megawatt hour, so it's very low cost. And our ability to produce other metals that diversify the revenue stream: silver, copper, indium, germanium. We're also a significant producer of fertilizers, and the Western Canada market is pretty hot for fertilizer, it turns out, this year. Just a bit on regional exploration beyond Red Dog and Pend Oreille, or the two districts we're focusing on are the Carpentaria district in Australia, which is a left-hand picture, and you can see some of the significant zinc producers that are in that region: McArthur River, Century, which is closing this year, later Loretta, Dugald River, Hilton George Fisher, Mount Isa. Cannington's, of course, a lead deposit. And so our exploration teams are quite active in this area and quite engaged in keeping an eye on the juniors that are playing in this area as well. If you're looking for elephants, you want to hunt in elephant country, and this is definitely elephant country for zinc deposits. Similarly, in Western North America, Northwestern North America, that's another area of focus for us. And you can see there's some of the significant operations on there: Red Dog, the Faro deposit, historic Faro deposit, Sullivan. You can see where Trail and Pend Oreille are located. And so we're looking at the Brooks Range, which is around Red Dog, the Sullivan area, which is around Faro. And we have a prospect there called Cirque, just south of there. And we're also looking around the Purcell Basin, which is where Sullivan and the Pend Oreille deposits are located. So just in summary, the key points in the zinc area are we largely been able to, well, 100% been able to offset the declining grade at Red Dog by increasing our throughput, combination of some good luck with softer ore, but also good hard work with high energy blasting. We've extended the mine life at Red Dog with adding on Kanayak resource to reserve, quite a nice little high-grade deposit. We've got the opportunistic restart of the Pend Oreille, and when zinc prices are expected to increase in the upcoming couple years. And Trail, of course, is a very low-cost smelter with a good byproduct advantage and low-cost power. And last but not least, Antamina is quite a significant zinc producer. So that's it for the zinc business unit. If there's questions on zinc.
Yes, I just have a question on Red Dog. A presentation that Teck gave about a month ago indicated declining zinc production at Red Dog. It was a slide that talked about globally supply that could be coming off the next few years, and it showed about a 60 kiloton percent reduction in output at Red Dog between 2013 and 17. In the absence of any expansion, is that still what you'd expect? And the second question is, you mentioned expansion potential at Red Dog. Is this something that's just incremental to offset declining grade, or is there potential to do something a little bit bigger there?
On the first question, the forecast for metal coming from Red Dog was forecasted to decline with the declining grades, but we've been fortunate to come across some softer ore that we've managed to determine how to feed through the mill to increase the throughput in the mill, as well as employ our mine-to-mill high-energy blasting techniques similar to what's been done at Hana Valley Copper to maintain the throughput despite the lowering grades. Going forward, for the next several years, we see the softer ore continuing for a couple more years yet, and we'll also continue to refine our high-energy blasting techniques. We're pretty optimistic we can maintain similar zinc production for the next several years, at which point we'll be faced again with declining grades. At that point in time, we'll have a number of choices to look at, and we're evaluating them right now by the potential of installing some more front-end crushing or grinding capacity to offset the hardness of ore to, again, increase the throughput and maintain our zinc production. To materially increase zinc production, though, in the longer term at Red Dog would be a different sort of a problem. We're limited by the storage capacity of our sheds at the port. As you know, it's a seasonal operation. So from the last ship that goes out sort of towards end of September, early October, till the shipping season starts in the first week of July, that window, the entire capacity that we can produce is dictated by the shed storage space we have at the operation. And so you'd have to think about how to expand that shed storage space if you wanted to materially change in that time frame. Now, during the summer months when we are shipping, we can look at improved grade management to increase our throughput during that shorter season, but that wouldn't be a material change. To make a material change, you'd have to think about expanding the operation to be able to produce more, increase the throughput, plus increase the storage capacity of the port.
Raymond Goldie from Salmon Partners. Does the recommencement of mining at Pend d'Oreille add to your production of byproducts at Trail, and specialty metals, for example, like germanium?
That's a good question. Germanium is a key byproduct that's in the concentrate that we do get from Pend d'Oreille. So it's a significant factor in the economics of Pend d'Oreille and Trail when you look at the joint combination. The two most significant factors in the synergies between Pend d'Oreille and Trail are the shipping cost. Pend d'Oreille is an hour south of Trail by car, so versus bringing concentrate in through the Port of Vancouver. So it's quite a significant difference in concentrate shipping cost, and the germanium byproduct benefits that Pend d'Oreille offers. It has quite a significant germanium content that Pend d'Oreille gets some of that benefit and Trail gets some of that benefit, but overall it's a Teck benefit.